in an inline set of numbers this quarter. Let's toss across. Nikunj chatted with Umang Vohra, the MD and Global CEO at Cipla. Let's hear out an excerpt of that exclusive chat.
I think on the India business, let's just talk the India business, the quarter includes numbers which are fairly muted for COVID. And actually, most of our field are back. We're almost resumed a full 100% field activity. I think there's some conferences, etc., that are not taking place. But other than that, I think most of our cost base, the way we would like it, I think a large portion of it is already back. It is our endeavor to maintain the margins. I think we've signaled at the beginning of the year that we will keep it around 22%. I think more than just the costs, the big thing, Nikunj, is the input costs and the supply chain variability. That is actually something that will impact the business going forward. Actually, all pharma businesses, not just us. But I think we have operating leverage to be able to offset that.
So how serious are these supply chain issues? Because just about every industry seems to be indicating that as of now, their understanding of the supply chain is quite complex. Nobody is giving us a comprehensive answer.
Well, I think it is complex, and that's probably why the comprehensiveness doesn't come. And the reason for that is, Nikunj, to some extent, predictability has gone down. You see, the two components here is that we are seeing all kinds of impact. We're seeing the impact of the China power crisis. We're seeing the impact of ships at containers not being at the ports that they need to be. And it's a little bit of everything, all those components coming up. I think most corporations have responded by either taking up the inventory levels so that we don't get hit by variability in the supply chain. And it's been but I think what's also happened is predictability is one thing, input costs rising is the other. And I think that has been fairly significant across the chain. We are beginning to see, I would say in some way, reinflation in the cost base. Commodities are all up. But I think most companies are now beginning to look at operating leverage to be able to bring down. So there cannot be a comprehensive answer because predictability in terms of just the way goods move are very significant in the world right now.
What happens to the COVID portfolio? And fingers crossed, looks like we are not in for a big third wave. So what happens to your COVID portfolio and also the inventory or the COVID inventory you're sitting on?
So the COVID inventory, so let's talk about the portfolio. We believe that what we've seen in quarter 3 is more or less around the level where COVID would stabilize, right? And it could be slightly lower than this, but some part of COVID is always going to exist. I mean, I can't imagine a scenario where 12,000 or 10,000 COVID patients won't be there, because in some way it's going to be like the flu. It's going to stay in our society. So I think the impact of COVID will obviously begin to get muted. I think we are sitting with some inventory and some provisions we've already started taking, Nikunj, for the inventory that we have. And, over the next 2 to 3 quarters, we will determine appropriately what is the right inventory to carry for COVID and not carry. We see COVID more as becoming regional as against national, right? So we will continue to see localized outbreaks of COVID depending on community settings, etc. And you're right, they're not going to be as significant in our view as we've seen already in wave 1 and 2.
So if I take the trajectory for Cipla and I'm taking it, let's say, exactly before pre-COVID, when the world did not discover a problem called COVID. If you compare the business environment of Cipla versus now that things are normalizing, how would you construct the scenario for us?
I think it's a great question, Nikunj. I think let me talk about our business 2 years back and our business 2 years forward, right? I think where we are today, we have seen significant amounts of digital leverage in our operating model. So a lot of our reach and initiatives, a lot of our field initiatives are digital based today. We're creating a digital and automated, automated systems in our manufacturing facilities. And the reason I use the word digital is because digital has the ability to provide you operating leverage in your business model. So I think from a business model perspective, operating leverage-wise, we have obviously gained. I think the other thing that's worked very positively for us is the equity that we brought dealing with COVID. Whether it was a product range and how we were able to reach this product range across all our markets, whether it was India, South Africa, or everything else. I think that has a very strong equity resilience. Equity has been established, which is very resilient with all the doctors and the hospitals in the country. So that affects our portfolio. The third is, I think there's this general feeling of the fact that, when there are challenges, these challenges can become opportunities. And that unleashes a new energy in the organization. It unleashes a new toolkit in our leadership for our key leaders. And so if we work with passion and we are able to convert some of these opportunities, I think it creates a positive fillip to the organization. We spent a lot of time in the last 2 years also looking at innovation and what it means for Cipla, especially as the world resets. And I think we've been able to focus relentlessly on the pipeline that's coming, as well as some new areas that we want to make bets on, like we've just announced the biosimilar initiative. So I think these are the couple of things that happened over the last 2 to 3 years. At the same time, I'd like to say, Nikunj, the business environment will stay. It'll continue to be tough, right? And we will continue to see input costs, supply chain variability, but these things will help us offset, manage that.
The US sales, if I compare the sequential number here, has only gone up by $1 million. Is that market share loss or price erosion? Because we know that US market price erosion has been quite severe.
I think the US sales typically respond to launches. And what we've not been able to have is material launches after our albuterol launch. And I think I see this calendar coming back, possibly in the second half of next year, where we will have very significant launches that move us up in step functions in the US business. The price erosion in the US in the base portfolio is around the 5% to 8% range. It's typical of the US, and it's been happening for a couple of years. That's on an annual basis. So I think the US will respond to launches, and the materiality of those launches will begin to shape up in the second half of next year.
You mentioned that already in your con call. I was going through the notes that second half of FY23, you've got 3-4 big launches. Are you confident that by the time you will go ahead with these launches, the pricing in the US market would be very different? Because if you are in a situation where you're launching and if pricing is under pressure, then it will not be a jackpot or aha moment for you.
I think the pricing for the category of products we are launching in should stay, because these are very limited competition products. We are hoping that these will not see the type of competition that other product categories have seen. One product is an inhaler, one is an injectable, a complex injectable, and the third is a product that is already settled in an IP, in the IP landscape. So I don't think we will see the type of competition that we should see in these categories. I actually think these would be quite significant.